Welcome back. You watched our first or second or whatever number series, and you're back for more. That means we got great questions and great answers. Todd Colley with Great American RV, Eric Perry. Let's talk more about RV finance.
Let's do it.
So, been around the shows for a while. See a lot of people come in and feel like they can get a better price with cash versus finance, or they just want to bring their own financing to the table, or they're dead and determined they want to pay cash. Tell me the ins and outs of one versus the other.
Sure. So the nice thing about RV financing is our lenders, that's all they do. Right? They do RV financing all day, every day. They write thousands of loans. The interest rates tend to be better with some of the national lenders we use compared to credit unions that, honestly, a $150,000 loan for a small credit union is a big note.
Yeah.
And that's pretty scary to them, so sometimes the interest rates are a little higher and the terms are a little shorter. Now, as far as paying cash, there's a lot of different kind of rules of thinking when it comes to cash versus RV financing. One thing I like consumers to think about is, where's that cash coming from? If that cash is coming from an investment account that's earning money, it's not always the best idea to pull that from an account earning money in a depreciating asset like an RV, where you can keep that in your account, it can keep earning money for you, and then you let an RV lender take the responsibility of the loan. And yes, you obviously have to pay interest on that, but over time, the interest that you pay on that simple interest RV loan will actually be less than the interest you're earning on that investment account that your cash is sitting in. So you always want to factor those in. Our finance managers do review that with customers to make sure that it is the right move for them to pay cash over financing. And then we'll crunch the numbers and see if it makes sense. There's one other factor that a lot of customers don't think about. When you pay cash for an RV, you've just dumped $200,000, $300,000, $400,000 into this camper, and there's a big depreciation period over the first couple years of ownership, especially. Right. If something were to happen to that camper, it doesn't take much to total these things. Unfortunate accidents happen on the road. We get nasty storms down here in the south where Great American RV is. Those campers just tip over, they could be totaled. And you could be out $100,000 based on the depreciation over that first couple years. So what I've always instructed or at least educated consumers on was, let the bank take some of that hit. Get gap insurance on it, put a down payment on it, and then maybe over the course of a couple years, when you get past that depreciation period, feel free to pay that off if you'd like. And now you don't have to worry about if it gets totaled, the insurance company might not pay that whole thing off. So there's a bunch of different things to think about when it's cash versus finance, but you make sure you want to talk to your finance managers and crunch those numbers, make sure it makes sense to you. A lot of our consumers think it's best to keep that money tucked away, let the bank take the risk on an RV, and just make your monthly payment on it.
This one I hear a lot online, a lot of chatter, the forums on Facebook and stuff like that. Fees when it comes to financing. People, it's a strong word, right? Sure. You use fees, you have a list of stuff. Some of that stuff can be kind of hard to read, a little scary. What kind of fees do we have when it comes to RV financing? You have gap, you have title, you have fees, taxes, etc. How does all that stuff work?
Sure. So when it comes to the fees themselves and the difference between financing and paying cash, in most situations, there's zero difference. So you still have to pay your sales tax on your camper. Yeah. You still have to pay the registration. There might be small fees associated with getting the unit prepped and things like that. But if you're paying cash or you're financing, there's no difference in fees. So we don't charge extra fees. The banks don't charge extra fees. You can pay cash, you can finance, and there's no extra fees associated with it.
So no extra incentive going one way or the other when it comes to the fees portion of things.
That's right, yeah. The consumer's not going to pay more in fees to finance an RV in most situations. There might be a few lenders, some credit unions that do charge different fees. Sometimes they call it a VSI fee, things like that. Great American RV doesn't really work with those lenders, so you might want to ask that question. But for the most part, if you're looking at a buyer's order with cash and a buyer's order with finance, they're going to look the same.
Okay. If I have questions on my fees, ask the finance manager,
100%.
Right? They'll explain everything right there.
They'll break it down for you, everything, yep.
Any of that negotiable?
The fees themselves, most of the time, are what your state county, city are going to
Taxes,
charge along with your
yes. Yeah.
taxes. The government charges them.
Right.
We got to pay it to them. Everybody's got to pay it.
Yep.
So generally, we don't negotiate the fees. That's something between you and the state that you live in, the city
Sure.
that you live in. So for the most part, the fees are what they are, and then it's just the price of the camper and trade allowance.
Save your negotiations for the price of the camper,
Yeah.
right? Not when you go to finance.
That's right.
All right, so I think that's everything for this part of the series. We'll have a few, so make sure you're tuning in and following at Great American RV for the next part of the series for RV Finance with Eric Perry.
Perfect.